Due to its nature, cash is very susceptible to theft. And to prevent theft of cash and other cash fraud schemes, an internal control for cash must be established. And one control is the impress system. So what is impress system? It is an internal control for cash which requires that all cash receipts should be deposited intact and all cash disbursements should be made by means of check. Okay, so what do you mean by deposited intact? So it means that all cash collections should be deposited immediately. No part of the collection should be used for expenses for disbursement. However, it is impractical to issue check for petty expenses, for small expenses. That's why a company must establish a petty cash fund. So a petty cash fund is a fund for small expenses which cannot be paid practically by means of check. So there are two accounting systems for petty cash fund: the impress fund system and the fluctuating fund system. Okay, so let's provide the entries under each system. So the first transaction is to record establishment of fund or increase in fund. So for impress fund system and fluctuating fund system, debit petty cash and credit cash in bank. Next is to record decrease in fund. So for both impress fund and fluctuating fund system, the entry is debit cash in bank and credit petty cash. Next is to record payment of expenses. For impress fund system, there is no entry. While for fluctuating fund system, debit the expense accounts and credit petty cash. Okay, so for this transaction, there is a difference between the two in terms of recording. Okay, so here under impress fund system, there is no entry, and for fluctuating fund system, record the expense accounts. Let's move to the next transaction to record replenishment of petty cash. So for impress fund system, the entry is debit expense accounts and credit cash in bank. Okay, so it's the only time to record the expenses incurred. As compared to fluctuating fund system, expenses are recorded as incurred. And to record the replenishment of petty cash fund, under fluctuating fund, debit petty cash and credit cash in bank. Okay, so there's again a difference between these two systems with regard to recording of replenishment. Last is to record unreplenished expenses. So for impress fund system, debit expenses and credit petty cash. So for fluctuating fund system, there is no entry because the expenses are already recorded. Okay? The expenses are recorded as incurred. Okay, so there's again difference between the two systems with regard to recording of unreplenished expenses. Okay, so now that you know the entries under each of the two systems, let's try to provide the entries for this problem. Okay, so on November 1, the entity established petty cash fund of 20,000. Okay, so for impress system and fluctuating system, same entries: debit petty cash, credit cash in bank, 20,000. On during November 1 to 29, there were recorded expenses amounting to 5,000. So for impress, there will be no entry, and for fluctuating, record the expenses. Okay, so debit expenses, credit petty cash. For November 30, the transaction is replenishment of fund. So for the impress system, the entry is debit expenses, credit cash in bank. Using fluctuating, the entry is debit petty cash and credit cash in bank, 5,000. Okay, on during December 1 to 30, there were again petty cash disbursements amounting to 5,000. So for Impress system, there will be no entry. For fluctuating, expenses are recorded as incurred. So debit expenses, credit, petty cash, 5,000. Okay, so assuming the fund was not replenished on December 31, so what will be the entry for Impress system, using Impress system? So the entry is debit expenses, credit, petty cash. So there is an adjusting entry required to update the balance of the petty cash. And for fluctuating, since expenses are recorded as incurred, there will be no entry. Okay? Okay, so let's now compute for the petty cash shortage or overage. So to compute, should know first the formula, okay? So petty cash accounted less petty cash accountability is equal to petty cash overage or shortage. So if the petty cash accounted is greater than the petty cash accountability, meaning there is an overage. Okay? Otherwise, there is a shortage. Okay? When we say petty cash accountability, it includes petty cash balance per ledger and petty cash impurities. So what are these petty cash impurities? When we say petty cash impurities, these are items that do not belong to the fund but are found in the fund. So what are these petty cash impurities? So maybe there is a shortage in the petty cash fund. That's why the petty cashier placed some items in the fund to conceal the shortage. Okay, so later we'll be solving problems involving petty cash, particularly computation of petty cash shortage or overage. Okay, so how do we account for shortage or overage? Okay, okay, so how to record cash shortage? We use cash short or over. So it is a suspense account. Meaning of suspense account, it will not be reflected. It is a temporary account and it will not be reflected on the financial statement. So for cash shortage, the entry is debit cash short or over, credit petty cash. So for cash overage, just the reversing entry. Okay. Next, what if the result of investigation reveals that the cashier is responsible for the shortage, or if the overage is the money of the cashier? Okay, so for the cash shortage, we debit receivable from cashier and credit cash short or over. Okay, for cash overage, debit cash short or over and credit to payable to cashier. So what if the reason is not determined? Okay, so the result of the investigation disclose nothing. Okay. So the cash short or over will be close to miscellaneous expense if it is a cash shortage, and it will be close to miscellaneous income if it is a cash overage. Okay? Okay, so let's try to answer some questions. What is the effect of not replenishing the petty cash at year end and not making the appropriate adjusting entry? Letter A, there will be cash overage. Letter B, there will be cash shortage. Letter C, cash will be overstated and expenses will be understated. The expenses will be overstated and cash will be understated. Okay. So we cannot determine whether there is an overage or shortage just because the petty cash is not replenished. Okay. So there is no enough information to determine cash overage or cash shortage. Okay, so these are already incorrect answers. So letter C and letter D are just opposites. Okay, so to determine the effect, you should know the entry in to record replenishment of petty cash. So the entry to record replenishment is debit expenses or debit the expense accounts and credit petty cash. Okay, so if the expenses were not recorded, the expenses will be understated. Okay, so the answer here is letter C. Okay, as well as the petty cash, if the petty cash is not recorded, is not credited, the cash will be overstated. Okay. Next question. Which of the following statements is not true about petty cash? Letter A, the petty cash account is debited when the fund is replenished. B, the impress petty cash system adheres to the rule of disbursement by check. C, to increase the size of the fund, an entry is made to the petty cash account. Letter D, the major purpose of an impress petty cash fund is to effectively control cash disbursements. Okay, so let's check the true statements here. Letter D, okay, so it's the major purpose, so definitely it's a true statement. So it's not the correct answer. Okay, next, letter C, to increase the size of the fund, an entry is made to the petty cash account. Okay, so whether we use the fluctuating fund system or impress fund system, it is true. Okay, true to both system. Okay, so there are only two remaining choices here, letter A and letter B. So let's check. Letter B, the impress petty cash system adheres to the rule of disbursement by check. Okay, so it's correct, right? Impress system means that cash collections are deposited intact and all disbursements should be made by check. Okay, so why is letter A incorrect? It may be correct, no, for um, the fluctuating fund system because the entry is debit petty cash account and credit cash in bank. But it's not true if we are using the impress fund system because the entry to record the replenishment is debit expenses, credit cash in bank. Okay, so letter A is what do I call as a half truth statement. Okay, so letter A is the correct answer.